All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and we're going to talk a little bit about whether or not it's time to sell all your stocks in your portfolio, close up shop, and just go hit the beach for the next couple months and see what happens.
Which is what people used to do, right, in the summer for a long time, and then we kind of now can go on Robinhood on our phones, so it's kind of changed.
Yeah. I mean, you can see our "Sell in May and Go Away" video, but the reason why I want to talk about this is Burry's back on Twitter, and he's been throwing out some dire warnings left and right. He's been throwing out a lot of interesting little random tidbits and deleting them again immediately. He's quite the character here.
Oh yeah.
Yeah. So, you ever seen this chart in the background here before, Dylan?
No.
No. All right, we're going to talk about it a little bit. This is the tweet that Burry put out. People always ask me about going on in the markets, and it's simple: greatest speculative bubble of all times and all things by 2 orders of magnitude. And this chart bears that out. It's like 2.8.
That is pretty wild.
Orders of magnitude.
You want to sell everything.
Yeah. So this is the actual chart here. They call it the Buffett Indicator. It's a relationship of market value to GDP. GDP, gross domestic product. Sound familiar? Basically, it's designed to represent the value of all stocks compared to the annual production of the United States in terms of output from their economy. I mean, as the economy increases, the stock market should fluctuate up and down, but in general, along the same trend line is what you're looking for. And you can see at this point, we've become pretty grossly discordant with the actual economic trend. We're more overvalued than we were in the internet bubble age.
So you're saying I should take out 50 grand in margin right now?
No,
that'd be a good call.
That would be a horrible idea at this point.
Well,
the other funny thing with right now in the world, right? So I was kind of curious because crypto wasn't around for most of this time, right? Bitcoin got its start in the early 2000s, but it really hasn't taken off as an investment vehicle until the last several years. And if you actually add the market cap of all coins, which is about $1.4 trillion to this, you're now talking about it being 239%.
239%, huh?
Yeah. It adds another 6% or so in terms of the ratio here of investment value to GDP.
Yikes.
Yeah, exactly. So, like I said, you're also seeing warnings about this. It's when we have this parabolic rise, you're going to see a really reversion towards the mean, right? That's what you see here, right? We had this really great parabolic rise, and then dramatic down. You're talking pretty aggressively back towards mean reversion. That's not. Makes good sense to me, at least on a logical basis, but markets aren't always logical.
No, they are not logical at all.
Yeah, exactly. So this is that same tweet again where he's warning about the how speculative this bubble has become.
Insert AMC. I should have said that.
Yeah, exactly. AMC and GME and everything. So, that begs the question. It's there's tons of evidence. You're seeing people in the hallway that know nothing about stocks all of a sudden are on Robinhood app trying to buy more Dogecoin. There's signs all around that is a speculative bubble, right, Dylan?
Oh yeah, my one of my fellow colleagues at work, she came up to me and asked me, just because she found out that I knew something about stocks. She's like, "Hey, do you know what Dogecoin is? My grandma said I need to buy it." Perfect. I was like, "Really?" Is she a tech person? She's like, "Nope." She just said that she put a bunch of her money in Doge.
Yeah. I mean, that is an absolute fantastic sign. When you start getting financial advice from grandmas about cryptocurrencies based on jokes, but yeah. Yeah, exactly. So Peter Lynch, famous investor, he talks a little bit about market timing, right? Theoretically right now, we know it's a really overvalued market. The question is, what do you do about it? I did like the comment from someone on our previous video that says, "You short it, you puss."
Yeah, that was. Fortunately, Robinhood does not offer that ability, but yes.
Yeah, exactly. But I get it. I respect it. Maybe someone's got a little bit more guts than I do. But one of the questions is like, is it worth going cash? Right? Start pulling back. Deleveraging your account at least a little bit, and just taking a little bit of risk off the table. And this begs the question of market timing and what effect that has on the returns. Right?
Mm-hmm.
There's been plenty of evidence over time that it's not a good idea. That trying to play that game and be like, oh, the market's overvalued, I should get out. You never know. Like, the market's been overvalued, for several years.
Yeah, had you thought it was overvalued, which it was in like 2018, you sold, you would have missed out on all the ridiculous gains in the last 3 years.
Exactly. So that's this line. Far more has been lost by investors preparing for correction or trying to anticipate corrections than then lost in the correction themselves.
Yeah.
The plenty of research has been conducted around this too, like actual good analytical evidence here. Every study is conducted differently, so it's hard, but the vast majority of these studies basically say that market timing isn't a thing. This is one of my favorites down here, this chart on the bottom. This is from Merrill Lynch, and this was if you invested $1,000 at the beginning and then let it ride for 20 years, as opposed to missing the top 10 performing months over 20 years, right? 10 months over 20 years, not a lot, or the top 20 months over 20 years. So you were cashed for a short period of time.
10 months out of like 240 months possible for the top 10. Okay.
Yeah, exactly. So that's just like a short period of time relative that you were all cash, and it just happened to be a really good time for the market. Look at this, how dramatic this effect is on your returns. Absolutely insane.
That's pretty wild. So you essentially lose out on more than 50. It's almost like 70% of the returns.
Yeah, exactly. And then there were other studies that even showed underperformance.
Yeah. Geez.
Yeah, it's absolutely insane. Like to try to do that market timing. Like, I respect the fact that like we're at a very like overpriced market, but to me at this point, yeah, you deleverage. Doing call options are not a great idea. Trading on margin right now is probably not a great idea.
It's probably not a good idea.
Yeah, exactly. But the point of the fact is that the market is going to revert towards the mean, but how much are you going to lose out in the interim waiting for that to happen?
Right. Can you go back to the last slide? That Putnam thing, I was reading that. It was a survey by Putnam Investments found that market timers who miss just 10 days in the market could lose up to half their value.
Yeah.
That's gross.
Yeah. Absolutely insane.
And then there's that Peter Lynch one where it's like no one on Forbes is famous for timing the market.
Yeah, exactly. Like if it was that simple, someone would have made a lot of money doing it. Does like Warren Buffett time the market? No. You be sitting on a lot of cash right now and just waiting for good opportunities. Yeah. Some people would call that timing the market, but I don't know. That's not me. I'm at like 10% or so cash right now. That's about it. But I don't anticipate raising any more.
Yeah, it's pretty wild. All right. So what we have here, this is just this year. So what Vinny's talking about is more of a macro view, looking at like previous a bunch of years and a bunch of years of evidence, but it's on like every scale. So for instance, this is January 4th to June 18th. So January 4th was the first day of open because it was January 1st was the holiday. So if you look at the white lines, that is the open to the close of the high for the year, currently at 425.48. So the open to the close. The two red lines are basically a giant kind of spurt of that, and then the two yellow lines are the time frame. So we have that square right there that shows obviously a lot of gains, right? All right, go to the next guy. So looking at that chart, we had a gain of 50.17 on the SPY, okay? But from March 25th to April 16th, which is only 16 trading days, that was 31.28 of the 50. So 62% of the gains for the entire year so far happened in 16 days. Okay, so 16 days of the 116 totals so far. And by the way, we may not close near the high this year. I don't know where we're going to go, so this is all speculative. But as of right now, we're at an 11.8% gain in the SPY. The trailing 10 years of the SPY gain is about, was it 12.11? That's without dividends. If you add dividends, it changes.
Higher.
But just chart-wise, the average over the last trailing 10 years is 12.11. We're 11.8. So this is pretty wild that within 2 weeks, we did 62% of a probable total gain for the year.
Yeah, that's absolutely fascinating. I actually had not realized that this year was a good case study for that so far.
Yeah, it's pretty wild. It's just that one all the way up. And the problem, if we lose that resistance line, there's also nothing. Go back. I just realized that. I should have put that in there. So when you talk about resistance, going up that ladder on that in that square chart, there's not many things where if we tank that, there's a lot of help. When you look at like staircasing and ladders, it's going to be a problem. So just throw that out there.
Yeah, I mean, pullbacks tend to be pretty violent, that's for sure. And but the same thing with the up days. That's kind of the whole point of this thing is if you miss so many of these days, then your returns for the year are severely hampered.
Yeah, if you look closely at that square, it's actually the gains are mostly 4 days.
Yeah.
1, 2, 3, 4. It's 5 days. Nice, the majority.
Nice big bars here.
Yeah.
Yeah, it's absolutely insane. This is what
So yeah, this is what I said. We were at 11.79% return. No, you just go to the next one. I forgot I made that slide.
I love it. All right. Well, thanks for tuning in, guys. Let us know down below. Like, what are you thinking? What are you going to plan to do with your portfolio? You're going to go all cash, like some people have said, or what are you thinking?
Yeah, it's pretty interesting because I would have said I'm going to sell, but now that's some fairly damning evidence.
Yeah,
because like this could go up. Like AMC should be at 60, right? So the SPY could go up to 450 before we go down to 350. Like there's no way to know. It's a complete guess.
Exactly. So. Very, very true. But I would get off your margin.
Oh, I'm not actually margined. I'm only margined like 20 grand. It's fine.
All right. Yeah, it's totally fine. All right, guys. Well, thanks for tuning in. We'll catch you on the next one.
Bye-bye.